This is the Norris Group's Real Estate Investor Radio Show, the award-winning show dedicated to thought leaders shaping the real estate industry and local experts revealing their insider tips to succeed in an ever-changing real estate market. Hosted by author, investor, and hard money lender, Bruce Norris.
Hi, and welcome to the Norris Group Real Estate Radio Show and Podcast. We had a little trouble with the guest intro this week, so I'm going to go ahead and record that and then throw it to Bruce right after. Please enjoy the show. Today, we have a very special guest, John Schaub. In his 35 years as an investor, John has seen his fair share of recessions, tax law changes, crazy interest rates, and has prospered through it all. His 2016 best-selling book, Building Wealth One House at a Time, second edition, assisted more than 100,000 real estate enthusiasts on their way to successful investing. John recommends buying better, well-located houses rather than cheaper houses and other management-intensive properties. Better houses are more profitable and far less trouble. He advocates paying off debt, owning properties free and clear, and renting them to long-term, high-quality tenants. John buys, sells, and manages his own properties and enjoys providing quality housing at fair prices for working families in his community. He teaches one seminar a year where students can learn how to identify the best investment property in their own town, how to buy it at below market prices, and how to negotiate terms that guarantee a profit. John, a Florida native, is a proud graduate of the University of Florida, where he earned his BA from the College of Business Administration in 1970. He is an accomplished boat captain, both power and sail, fisherman, skier, both snow and water, and an instrument-rated pilot. John loves to travel, especially with his wife, Valerie, and their young adult children. Now, here's Bruce.
I'm just curious because I've asked this question as I started learning more about people's backgrounds. Did you have like when you were a kid growing up in school, did you have some kind of an entrepreneurial bent where you say, well, yeah, I'm different than other people?
Well, I had a paper route, I raked leaves, I mowed grass. So yeah, I was always out trying to collect a buck doing something. And I'd rather work than watch television. I played sports, I enjoyed sports, but I did like to work. So maybe so. Yeah,
well, I love stories that I've started asking because of some of those signs you go, wow. And so I'm always fascinated when you have like some 5-year-old doing something, you go, oh my God, where did that come from? And sometimes it's the first person in their family. That's what's pretty fun is when everyone else just has a 9-to-5 job and then you have this entrepreneurial 6-year-old who's doing stuff just out of the blue. So I'm always fascinated by that. Yeah. When did you start being interested in real estate?
I started while I was working summer jobs while I was still in high school. I worked for a fellow who was a real estate developer, and I was doing things like painting fences and digging ditches and then washing dishes at night in a little country club operation. But I watched him and how he made his money. He had a nice airplane. He had a nice farm. He had a pretty wife. He had a lot of things that looked good to a 17 or 18-year-old, So I paid attention, and long story short, he had a beach Bonanza, which is the same thing I've been flying now for 25 years. He had an airplane and I wanted one just like it. So he inspired me to take chances and do things that a lot of other people wouldn't do, I think, to get where he was and where I am today.
I'd have to say that what sets you apart from people that I know in the industry is that you have definitely taken time for a lifestyle. You're not a workaholic. You have a very processed way of approaching this business that lands you on time to do whatever you want.
Yeah, I think that's true. I think and my kids certainly have inherited that. They have passed up big buck jobs for jobs that give them a better lifestyle, which I think is the right thing to do probably in the long run. But you're right. I work because I like to play and not because I like to work.
That's interesting. Okay. Well, I think it sets you apart. Did you have a real estate trainer that you liked more than others when you were growing into the business?
Well, the first class I took was a class that you took to get your real estate license. And the fellow who taught it was a real entrepreneur. He taught classes all over Florida, and I could see he was making a ton of money doing it. So I went to work for him. My first job out of college, it wasn't really a job because I was only teaching, one class a week for 6 weeks, but it was for teaching for him and watching what he was doing and how he put it together. And that's where I learned how to teach. I was not a teacher before that. I was not a public speaker before that. My day job was selling real estate. I had a real estate license right out of college, and I started selling property. And I sold one property while I was in college, and I made about a $5,000 commission. This is back in the 70s, early 70s, or 1969, I guess. So, early on, I saw the potential of real estate. I didn't have a plan of how to make money. So I started off as a broker and a salesman, and I hired a bunch of people to work for me, and learned that I didn't like that part of the business, but I did like buying things. So I started buying stuff early on, and I still have property I bought in 1973.
Yeah, when we talk about you having a 35-year career, it closes in on 50 years.
35 plus, we call that.
That's right.
Yeah, and that 4 recession thing you talked about, I think we're up to 7 now.
Okay, yeah, I think that introduction's
That's an
lagging
old
for
bio.
time.
That's okay. I use the same picture in the same bio. It works.
Well, like I said, you haven't changed. I'm curious now. See, I love that you've taken definitely a different path, because I didn't know anything about real estate. I never was a real estate agent. I never even had an entrepreneurial, example. So it's just interesting. Everybody has a different path.
My father, he worked for one company his entire life.
Yeah.
But he made some decisions like I made and like my children have made to forego the big paycheck. He had a chance to move to Tampa and run the company, and then move to New York and run a great big company. He decided not to do that. He decided to stay here in a sleepy little town of Sarasota and enjoy life and play golf and fish and do all the things he liked to do. And he made a good living, but he didn't go on to be a rock star, which he could have done. So you notice that, you hear what your parents say, but you really pay attention to what they do. And I've seen that with my kids. I mean, I write things down. I write books and I write things for my children. So when I'm gone, they can read this and understand why I did what I did. But they noticed that I had the freedom. I flew down to Miami and back yesterday in my plane, taking my son-in-law down there for a job. I can do things that most people can't do, because I'm not tied down to I don't have the obligation to be here all the time. I can work when I want to work.
It's interesting that you landed on the square, that instead of, let's say if you're trying to sell seminar seats, buy something at half price, flip it, make a fortune, blah, blah, blah. Yours is very different. It's buy one house at a time. And that doesn't sound very exciting until you do that for about 25 years.
You have to have a long vision, I think, but most people don't ever accumulate any assets. Even the people that flip a lot, they make a lot of money, but they don't accumulate things. So they have to keep doing it. And my goal was to get out of the obligation to work every day, to have as much passive income as I had. And it's amazing how fast you can build that passive income up. It doesn't take 25 years. 25 years is certainly enough to make a lot of money and pay a lot of things off, but you can develop quite a bit of passive income in 4 or 5 years.
Yeah. That's interesting that was the route you took. Jack Fullerton obviously was in your circle, along with Jack Miller and all that. And he was the one person in California that kept on bugging me about that.
Yeah.
I was flipping a lot of houses, and I was keeping pretty much nothing. And the attraction, and partially it's what you get. When I was introduced to real estate, that was the model that I saw.
Mm-hmm.
And I think that's an influencer. He didn't keep anything. And so when I would buy a house, let's say I'd buy a fourplex for 40 grand and it was worth 130 after we fixed it, I did that all the time. And it wasn't until Jack Fullerton's, 10th speech about you got to keep some of this stuff, I finally started to do that. And, once you get in the habit of doing that, then there's part of it's kind of cool when you're surrounded with people that are accomplishing something. You find out their goals don't 10 free-and-clear houses. Well, all of a sudden you kind of got to do that too, right? So it's not so much competition, but it seems like, okay, if that's smart to that guy, maybe that's a smart thing. And it kind of goes on. You just methodically clip that off. And then by the time you get to 10, they're at 18. You're going, oh, shoot. I would say one of the things that probably gives you the greatest joy is to watch students over the years that you've taught change their entire life.
It's true. That's true. And I've been fortunate because early on, my friend Jack Miller and I taught a lot of classes back in the 70s and early 80s. And then when I was married and started having children in 1982, I cut way back on my teaching. I've only been teaching once or twice a year since then. And I haven't taught in 2 years now. I enjoy it. And Peter Fortunato and I are going to try to teach something this year, but it's been a strange 2 years. But I have a lot of other things I do. It's teaching and buying real estate, managing real estate, or probably 5% of my life. There's another 95% that involves a lot of other things. So,
Do you, like when you teach a class and probably have a lot of repetitive students, but what is it that you look for and go, okay, that person's going to knock it out of the park? What is it that you sense?
Looking for somebody to light up. People fight you in class sometimes. I had this one lady who just fought me tooth and nail. She didn't buy what I was selling. She didn't believe you could do any of this stuff with owner financing. People actually would talk to you, and then she went out and did it. We have people actually go out and knock on doors and talk to people, and she came back just amazed that people would tell her all the stuff they told her, and amazed that they would sell her a house. And so when people light up like that, it's just a lot of fun. And everybody has their own path. I mean, some people go out and buy a lot of properties. Some people just buy a few, and I hear more from people that have just bought a few, bought 5 or 10 or 15 and haven't paid for. And now they write me a letter and say, we're so happy we went down this path because it wasn't complicated. It wasn't scary. It just took a little time. And that's probably the right path for most people. Not to set a goal for 100 properties, but just half a dozen or a dozen.
Anytime the monthly income surpasses your monthly nut, that's a day that you can open up a glass of champagne and go, that's a big deal.
Yeah, that's right. That's right.
Mike Cantu and I were having 2009. So the whole real estate world's crashing. And we were eating lunch and we were talking about some of the experiences that we were having with people that surrounded us, that hadn't done the right thing or hadn't prepared for that day. And then we just realized he and I weren't in that situation. We weren't in desperate times. We were at the opposite end of that, going, what's for lunch? No, we weren't in 2009 the same way a lot of other people were.
Sure.
Yeah.
Well, you shouldn't have been. You've been doing it for a long time. So somebody came up to me in class and said, "You act like you have a lot of money." I said, "I'm supposed to act like I have a lot of money. I've been doing this for a long time." If you're not successful after a long time, you shouldn't be teaching.
That's a very good point, by the way. Do you have a favorite market to buy in?
Oh, yeah, I like it when you can't sell, when nobody can sell, when interest rates are high, when the banks aren't lending. That's when I do most of my buying. And so, it's cyclical. I buy a little bit all the time. I bought one a couple of years ago. I didn't buy anything last year that I'm aware of. I don't think I did. But I'm also at the end of not the end of my career, hopefully, but I've been doing this for a long time. I don't need to go out and buy 20 more houses, and I won't. But I certainly will buy some because I like helping people. And when people walk in here and they're in trouble and they need to get rid of something, I'll buy it from them. And I may hand it off to one of my kids or another investor here in town, but I'll put together the deal, solve a problem.
You have a physical office where people walk in because
yeah, I'm sitting in it right now.
Okay. All right. Yeah, that I didn't think about. Normally, when you're buying properties, you're attracting, you're generating leads and stuff like that. So I guess you don't need to do that.
Well, most of my business is a referral business. Somebody will say, you need to talk to John because he will buy your house today and solve your problem. And, so I have the reputation. Of course, I bought property from a lot of different brokers here in town. I buy a lot of my properties through brokers, and they just know that I'll buy and close in a hurry. So, most people can't do that.
Yeah. Well, reputation, that's a very important thing in investing.
Bruce, before we get past the education piece a little bit more, can I ask a question?
Sure.
John, Aaron here credits you a lot for having him actually jump into the business. Here he is, the son of Bruce Norris, who's, his earliest memories are, lifting carpet and, seeing the cockroaches, scurry about when they're doing rehabs, but yet it took really your philosophy for him to jump into the business. So I'm sure that you've seen a ton of people who are, look like they're willing to go and they're just itching to get, but they still don't jump in. What do you think is that moment that finally gets to people and just go do it? Because there's a lot of hesitation, in sales and buying and things like that. What do you think really drives people to just finally say, okay, I'm going to do it?
Well, when I teach my class, I get people to go out and go face to face with people and talk to them. And a lot of folks are scared to do that. That's not a comfortable thing for a lot of people. So being able to actually talk to somebody about money and about their house is a big breakthrough for folks. And the other thing is, I think, to recognize that to overcome the fear that something really bad is going to happen to you. Fear is what keeps people from making good decisions. And if you think about it rationally and say, I don't have any money today, I don't have much to lose, I've got everything to gain, and people put that in perspective. And that's why I tell people who are just starting, who don't have much, I say, you have a major advantage over the person sitting next to you who may have $300,000 in the bank, who is afraid to lose it. If you don't have anything to lose, you'll sign anything, you'll buy anything. So you'll take chances that the person who has something to lose won't take. And that's the difference between people getting started and people who've been in business for a while who have a lot of assets. I won't take the risk that I would when I was first starting. When I first starting, I'd buy something with nothing down to lost money and try to figure out how to make it work. Well, today, I want to make sure that 100% sure that it will work. So, I pay cash for things, or I put large down payments down to make sure they have positive cash flow from day one. So part of it is overcoming a fear of loss. And the other part, I think, is actually doing some business, which means you have to talk to somebody. You can't, I guess you could do it all over the internet and never see a person and never see a house, but to me, that takes all the fun out of it. I want to see the house. I want to meet the people. I want to find out what their problem is and make them an offer that solves their problem.
Well, that really didn't work for Zillow. they're out now.
Well, they didn't go talk to anybody. It was an algorithm.
Yeah.
And that's an interesting way to do business. And the stock market guys have been trying to do this for years. Quantitative analysis, trying to make it work just with the numbers. There's more to it than just numbers.
What's really interesting? We had a seminar years ago where Jack Fullerton, and why he was part of it is he, did exactly what you just said. He would go door to door. He would park in an area we wanted to buy a house. And then go door knocking. Sure enough, he'd buy one. Well, yeah. No one did that. So that was one teacher, and then there was another person that did another thing, and so forth and so on. And it was kind of neat because, like what you're just saying, like Mike Cantu's bought 1,500 houses, doesn't want to meet an owner at all. So there's different ways that people do it. Now he talks to them all on the phone.
Yeah.
But he physically doesn't want to meet them. You have other guys just want to buy REOs and talk with the agents, things like that.
I like asking a lot of sports related questions because I'm a coach and things like that. And what did being involved with sports teach you that you used in business?
That's a good question. I don't think anybody's ever asked me that. You can win by cheating, but it's at the end of the day, it's not nearly as much fun as winning with fair play. And in real estate business, the same thing. You can cheat people, and if you can live with that, you can make a lot of money doing that. But at the end of the day, you didn't play fair, so what you won, you didn't really win. You cheated to get it. So I think the idea of fair play, and then the idea of in anything that any skill you want to master, if you're learning how to hit a baseball or a tennis ball or a golf ball, it takes a lot of time. It's not a 15-minute, you don't read a book for 15 minutes and go out and play golf. It just doesn't happen. So it's a matter of knowing that this is going to take some time to develop the skills to be successful, and you won't pick them up the first day. I continue to make mistakes to this day, but it's okay to make mistakes. One of my favorite sports coaches was John Wooden, and I've read all of his books. And one of my favorite quotes of Coach Wooden was, "The team that makes the most mistakes will win." You have to take chances. You can't play safe. You can't play defense the whole time. You have to play offense. And I just wrote a newsletter on playing either offense or defense. And, it's a lot more fun to play offense than this defense. But you need a little bit of both. You need to be smart enough to not lose everything. That's the defensive side. But you have to keep making deals. You have to keep moving forward.
John Wooden was work ethic, man.
Oh, he was. It was.
That was you played for him, man. It was on because he was an athlete and he trained himself to be in super shape. And I love that he had so much principle. Do you pay attention to cycles? And so is 2022 reminding you of any?
I do believe in cycles, Bruce. Not everybody does, interesting enough. Some people just live for the day, I guess. But I see trends, and it's because I manage my own properties and because I'm the fellow making offers and people are trying to buy my property all the time. I have a real feel for what the market is doing at any one time. And right now, of course, the market's been hot for the last couple of years, many years actually. And some people think it'll be hot forever. I don't believe that. I believe there'll be a cycle. And the reason we'll have cycles is people, first of all, compare the amount of rent they're paying to how much it costs to buy a house. Right now, if you have good credit, you can actually buy a house and have payments that'll be lower than your rent. But you have to have good credit. You have to have good income. And that leaves out about, I would guess, more than half of the world. I don't have a statistic here, but I know there's an awful lot of people that don't have good credit, don't have good income, and don't have a down payment to buy a house. So that's why about half the people rent. And just round figures now. Don't get hung up on percentages. But so and those people that rent when the economy is good can pay the rent. When the economy is bad, they struggle to pay the rent. They have a hard time paying rent. Well, right now, there's a big market out there in the build for rent market, and they publish statistics showing that 96, 97, 98% of their people are paying on time, and that's probably true this year. But that won't be true universally. There'll be years where a lot of people won't be paying on time, so we track rents and how long it takes us to rent a house and how much our rents are increasing. And in the last couple of years, it's been wonderful because people have been moving in our town. The rents have gone up dramatically. But you can't just put that on a chart and say this is going to be the trend for the next 10 years. Things will change over the next 10 years. I don't know exactly how or why, but I guarantee you we're not going to have 27% increase in prices and 40% increases in rents for 10 years. It just can't happen.
Yeah, speaking of that, we've seen that, in the stuff that we're building in, Southwest Florida, but how surprised have you been on how this market has exploded through the last 2 years?
Very surprised. We sat around. I've been putting together a group of guys who are some of my sharpest students. We get together in Aspen, Colorado, and we'll be out there in a couple of weeks again in February. And 2 years ago, we were together, and nobody saw this coming. And these are all guys that have a lot of property and a lot of money, been doing this for a long time. Nobody saw this coming. We all thought it was going to be a downturn in the market, not a 30% uptick in the market and rents going up 40%. So we were all fooled. So, we can certainly all be fooled again. Just because everything looks pretty solid, maybe there's wild cards in the world and in the economy that turn things around. But that common sense to me is that prices cannot go up 25 or 30% a year after year after year after year. There has to be either a flattening or a downturn in the market. And because the major driver of this is demand and supply, something could happen to our demand down here in Florida. You're talking about Southwest Florida. It's been hot, but something could happen. Had a good hurricane or something like that might turn people back and say we don't want to be in Southwest Florida for a while. So things happen. You just have to roll with the punches. But I'm a believer in cycles. I like to buy into down cycles. I've been doing it for a long, long time. I bought 16 houses in 1981. I buy groups of houses typically when we have a really slow year, because you can steal them and not literally steal them, but you can buy them at wholesale prices. And I buy from builders most of the time. I'm buying from builders or bankers. Those are the two people that get in trouble.
Yeah, and when Bruce does a lot of his market forecasting in California, that was part of what got them in trouble in the past, in the past cycles, is the overbuilding. But there's a couple things that haven't happened in the last 10 years, right? There hasn't been any funny money, those crazy loans, and builders for the most part haven't overbuilt, at least not in California. We're short a lot of the building that has happened, so that's probably not going to be, you're not going to be able to buy, that model house that they couldn't get rid of anymore, right? Because they're building, like our builder isn't, as soon as he buys a lot, it's essentially the house is sold, and when we started in 2019, building in Florida, Southwest Florida, we were expecting rents of 1450, maybe 1600. Aaron just rented his house in Cape Coral for $24.95. Yep. It's a 4.2. Yep. And it's just amazing what the rents have done in the last 2 years.
Yep, I agree. It's really unprecedented. I just rented a house last week for $2,300 a month. It was rented to the previous tenant for $1,500 a month, and the previous tenant was with me for 16 years. And that's a big jump. $800 a month is a big jump in rent. So it is unprecedented in my life. I've never seen rents jump that fast. And it is demand and supply. I mean, that's what's causing this. And of course, part of it's inflation. You go buy chicken now, it's a little more expensive than it was a couple of years ago too. So the value of the dollar definitely is changing right now. But I still anticipate a change in the market. So I'm not afraid to hold on some cash right now, because I think there'll be opportunities soon.
So, a lot of times, I used to go with Bruce to all of his speaking engagements, and, people would, love the presentation. And then essentially they would catch him before he left and said, "Hey," and they would just say, basically hit their situation, what would you do? Right. So picture I'm that new guy at your seminar, and I got that situation. What would be your best advice to somebody getting into the market at this point and in this economy?
Yeah. I say, don't worry about where you think the market is. Go out and make offers on a house in an area where you want to buy something. And there's got to be a reason you want to buy in that area. It may be cash flow. It may be you think there's going to be growth. It may be it's close to your house and you don't want to manage something far away. But, buy something on purpose. But buy something, even if you pay the wrong price. The first house I bought in 1973. I paid too much for it. I paid too much down. I paid too high an interest rate. I still have it. And that house has made me more money than any other house I've ever owned, because I still have it. I still own it almost 50 years later. So, even if you buy a house in this market and the market goes down a little bit, or interest rates go up, or rents drop a little bit, it's not going to affect the long-term viability of that investment. If you buy a house that's a good house in a good neighborhood close to where you live, something you can manage, and something that's likely to go up in value. And I think two things will happen. I think real estate will continue to go up in value because people are going to continue to move to the good towns. Then on the other hand, I think real dollar will continue to fall in value because the government's going to continue to print more of them. It's just the state of affairs. And that hadn't changed in 70 years. It's probably not going to change in the next 70 years.
Bruce, I was just asking him one last question. You got one last question and we'll wrap it up?
You already talked about cycles because I hear your conversation. Do you have any concerns that we end like we did last time?
No, I think it's going to be different this time because, first of all, there's not that many bad loans out there. Almost everybody who's borrowed money in the last 4 or 5 years has a good loan. They have a 3% loan or 4% loan or even a 5 or 6% loan. But there's no reason for them to walk away from those houses because, second of all, the houses are worth more than what they paid for them. So I don't see a crash in the market. I do see builders getting their toe in the crack, and there's a lot of people that are new to the building business the last couple of years because the guy they work for was making 50 grand every time he sold a house, and they wanted some of that. So they're now in the building business, even though they were just good carpenters last year. And just because you're a good carpenter doesn't mean you've got the skill set to be a successful builder. You've got to buy a lot at the right price. You've got to buy the right lot. You got to build the right house, and you've got to market it. So there's a lot more to it than just building a house. So some of those folks are going to get their toe in a crack. And honestly, I'm looking I'm seeing prices drop a little bit right now, which is interesting because these are houses that have been sitting on the market for maybe 2-3 months now, which is a long time right now. I sold one house last year and I listed it and sold it in 2 days. Well, that's kind of the average, and that's what everybody thinks you're supposed to do now. You sell
That's
it
right.
2 days, close in 30 days, all cash, and that's what I did. And I said, that's lovely, but that is the first time in my life I've ever done that, ever. So I don't think that's going to be the new normal. I just think that's we're in one of the hottest markets ever. Because there's still credit available and there's a lot of people that want to buy. And the guy who bought this house paid cash. He's a retired guy who's got a bunch of money. He just wrote a check, paid cash. He didn't finance a dime of it. So there's a lot of people that have a lot of cash that are moving to places like Southwest Florida. Probably a different market if you go to Memphis or Kansas City or someplace that's not quite as pretty or attractive as where we are. So you have to be careful in those markets, and you have to be careful in this market. I think there'll be opportunity when people overbuild, and it won't be the whole market being overbuilt. It's more personal than that. It'll be the one builder who has built 5 spec houses, and now he can't make a payment, and he needs to get rid of one of those spec houses. That's where the opportunity will be.
Correct.
That's one of those things that our builder came across. Some of the local builders that were a little smaller weren't able to finish contracts, and he ended up being asked to finish some of these builds, and he just couldn't. He's too busy with his own, and he wasn't able to help the other ones out, and they just stop building. Some of these guys.
The address of those houses. Those are the ones I like to buy. You get somebody who's 90% done with a house. He either runs out of money or runs out of credit or can't get anybody to finish it. And now the bank ends up with that house. The bank is not happy because the bank has a house they can't sell. Because it's not done. That's where the opportunity is, and we've seen that happen over and over again. So I'm ready. Send me those addresses.
All right, John. Thanks so much for your time. I appreciate it.
Okay, take care.
Thanks,
Thank you. Bye-bye.
Yeah.
For more information on hard money loans and upcoming events with the Norris Group, check out thenorrisgroup.com. For information on passive investing with trust deeds, visit tngtrustdeeds.com.
The Norris Group originates and services loans in California and Florida under California DRE License 012-19911, Florida Mortgage Lender License 1577, and NMLS License 1623669. For more information on hard money lending, go to thenorrisgroup.com and click the Hard Money tab.